Hey, this is Awais with eMiniPlayer.net, and this is a recap for Tuesday, April 30th. So before we get into the charts, let's quickly review our trade plan. So in the overnight session, ES balanced in a narrow range with buyers at the 85 quarter support and sellers at 1590. And heading into the day, we were using 1588 to 1590 as the short-term inflection point. And a break above it would confirm buyers still in control, and rejection could lead to a break below the overnight low, which was 85 quarter. On the downside, we had initial support at 81.5 to 83.5, so that's the first area that we're going to be looking for a long setup. And the idea was that, bigger picture, buyers were still in control, so we would look for long setups at support. In the event of a break above 1588 to 1590, ES was likely to test the 1593 to 1595 initial resistance zone. So in the event that we took out 88 to 90 on the day time frame, we would be targeting 1593 as an exit on our long setups. We had Chicago PMI, consumer confidence out this morning, so we were going to wait for the econ to play out before really getting active in the market. And buyers were in control heading into the day, and then the overall context and overall bias has been bullish for the last several sessions. All right, let's jump into the charts. So we can see that off the open, ES establishes the opening range 86.5 to 88.5. We get a rejection at that 88 to 90 pre-market resistance zone, which was the short-term inflection point. Now we didn't trade this zone early in the morning because we were waiting for the news to get out of the way, and our bias was bullish on the day, so we were really more focused on the long setup into support. But the rejection and the failure over here told us that ES would likely break below the overnight low, right? So that was one of the ideas highlighted in today's trade plan posted before the market opens. Now, once news is out of the way and we head into the 81.5 support, that's where we're actively looking to take a long setup. So in our own account, we got long actually at 82, a little bit above 81.5 over here, because you don't always want to be waiting for the absolute bottom of a support zone to get hit, because a lot of times when the overall context is bullish, price won't even reach there, right? So you want to make sure that you're getting filled on the trade that you want to be in it. So on this one, we took it at 82, and we're essentially targeting 88 as a profit target on this trade. And ES kind of balances at support before making the move higher. This is pretty typical price action in the S&P. Typically doesn't just touch a zone and just go. Usually it'll balance within the support zone for a little bit and then make the move higher, right? So we're in at 82 and we're simply holding it. As ES is chopping around, kind of going a little bit against us, just kind of staying within this range. We're not taking any scale outs. We're not, exiting our position or anything for a small 2-point profit. We do scale out on trades, but the scale out has to be at a logical spot, right? It can't just be a automatic 2-point or 3-point scale out. It has to be at a inflection point. So once we get responsive buyers active at this support zone, the next inflection point is really 88. Now we had the opening range at 86.5 to 88.5, so we actually took profit a little bit ahead of 88, took it actually on this first push back up, and then the final target is still 93. That's still a possibility, but short term ES has to get above this before we can really consider the 1593 to 1595 initial resistance zone. So as ES pushes into this 88 to 90 zone, we're taking a complete exit and we're out of the trade. But that trade idea is still in play, right? The idea that once we break above 1590, now ES can head to 1593, that idea is still in play. So when S&P rotates and comes down back into the support zone, we're looking for long setups again. Now we didn't get in long on this one. This was the first pullback down, seemed a bit aggressive. Since we had already taken an exit on our trade, and this was kind of heading into lunch. We didn't trade this one, but after ES pushes up to 92 quarter and then pulls back, that's where we were active, and we did take a long over here. at the IB high, 1589, and the target on this trade was 1593. And a lot of this stuff, our main focus during the day is trading our own account. But, as I get time, I do post some little updates on Twitter. So if you're following me there, perhaps, using that stuff to just confirm your own ideas or just as a validation of your own ideas. So any of these, pullbacks into this broken resistance zone, which is now acting as support, are good opportunities to buy. And, again, we're targeting 93. We actually exited this trade at 92.25. Did not wait for 93. It was a little bit too near the closing range, and didn't really want to hold it into the close. The only time we really hold trades into the close is mainly on trend days. Now, the other thing I wanted to show was just a 15-minute chart on the NQ, Nasdaq futures. So NQ actually broke out to new highs yesterday, right? And today you can see that right off the open, it held above its overnight low pretty well, right? Just kind of poked below it, but these prices were rejected, and then it actually continues making new highs, right? So this is actually a breakout over here, retest the breakout, and then just continue higher, upside continuation. And that's the other reason that, I was pretty confident at taking the long setups over here. Now, if you don't use intermarket relationships, that's perfectly fine. I think that if you're still working on becoming consistently profitable, the focus should really just be on your market, right? So if you're trading ES, then just look at ES. Don't add other markets into the mix, because it's going to lead to a lot of confusion. But if you're already consistently profitable and you have a very good understanding of S&P trading, then some of these other markets can certainly help you get a more rich contextual view. And NQ breaking out and continuing to the upside was a big tell for me, and that's why I was actually pretty aggressive on trading the long side on this pullback. Normally I might have waited for S&P to come a little bit lower, maybe around 87, 87.5 or something, to take a long, but in this context, which was quite bullish, felt pretty confident taking it here. If you want to time some of these trades, you can look at the NYSE tick, which is a good gauge of momentum. And you can see that, we're getting pretty decent tick pushes down here, minus 683, minus 600. And timing-wise, these tick flushes down into minus 600, minus 700 on a bullish day provide pretty good long setups. So basically, as far as our trades go, really just long setup over here into the 88 to 90 zone, and then just buying the pullback over here, targeting 92, 93 for the final exit. So overall, a very good day. And heading into tomorrow now, we have several econ reports out tomorrow morning. And then, really the big one is going to be the Fed announcement at 2 p.m. Eastern. So S&P could, at this point, kind of just continue balancing back and forth before we get that economic catalyst to drive price in one direction or another. So far, buyers have been in control in the overnight session. Holding above 1590 would just confirm strength on the buy side. But in the event that we pull back to this 85 to 88 area, that'll be acting as support in the overnight session, and I expect that area to hold into tomorrow. And then if this upside bias can continue, then we could be looking at a move above 1600 by tomorrow or Thursday. So we'll play that out. I'll provide an update tomorrow morning, of course, and we'll go from there. But so far, the upside is still intact, and if NQ is any sign, we should get continuation of the upside. So let's see how this plays out. In any case, should set up some really nice trading opportunities. So hope everyone traded well, and we'll catch up in the morning.